Hey guys, welcome back to another portfolio update. For stocks that aren't Jivo, I gotta say, we're doing pretty well. Now, we'll get to Jivo in a second, trust me, but I want to talk about some of these other positions first because I hate to break it to you guys, but Jivo is not my favorite stock in my portfolio. I wish I could make a video talking about Fedex or talking about Qualcomm or talking about Tapestry and have that video actually get views, but I cannot. Fedex is doing very well. Like, we are only 3% in the green. Like, Fedex had some pretty strong earnings. They missed on revenue, but they absolutely destroyed EPS. I already made a video going over Fedex, but the point is that they raised their guidance, and the fact that Fedex is doing well, it means that the supply chain is recovering because keep in mind, FedEx is a supply chain. FedEx doing well means that we are slowly getting out of whatever crap we're in now. Google and Meta, take a look at Meta. We are well into the green on that stock right there. 21.7%. Meta is, at one point, Meta was a value stock, but it has since grown out of it. Now, as far as how long I plan on holding Meta, the last share I bought was in October, so I need to hold on to Meta until at least October for these shares to go long, and then we'll see. But with Google and Meta, Google's doing pretty well too. We're already back at 106, and it keeps going up. As we all know, Google and Meta are pretty much tied to the ad budgets of other companies. And as you guys well know, given the market downturn and everything that we've been going through for the past few years, basically the ad budgets of various companies around the world have gone down. And as a result, Google and Meta, who relies on ad revenue, they have been suffering. And once we get to the other side of this, whenever that may be, whenever inflation goes down and we get back to some semblance of normal, and companies' ad budgets start going back up, and they're able to spend more on ads, these stocks are going to shoot back up. Unless something really, really bad happens to either of these companies, once the ad budgets go back up, these are going to be looking really, really good. Qualcomm is looking really good as well. I never have to worry about the stock. I check the earnings now and then, but that's it. I know it's going to do well, and so far it is. Now, as far as when I'm going to sell the stock, because as people who have been subscribed to my channel for a while may know, I am trying to slowly condense the number of stocks down. But as far as when I'm going to sell a Qualcomm, it's probably not going to be anytime soon because it still has a forward PE below 15. So as far as when I'm going to sell it, I don't have an exact stock price in mind, but it'll probably be if it hits a PE of, 18 to 20. At that point, I might consider it. Tapestry has been an absolute champ ever since, for the past few years. Even though it's been down versus a few years ago, we still have great gains. And as a matter of fact, just take a look at the 4 PE. If I wasn't already 178% in the green on Tapestry, I would be buying more today. But alas, I'm holding, at least for the time being. So yeah, this portfolio is inching its way back up. And now that I said that, let's take a look at our problem child, Jivo, the stock that is definitely not inching its way back up. And this ain't clickbait. The title wasn't clickbait. The stock did hit its all-time low today, yet again, going to $1.49. Now, you may say that the stock price short-term doesn't matter, and that is very true, except in the event that Jivo goes below $1. And we're talking, if we go back a month ago, less than a month ago, it was sitting at $1.82, and it's already at $1.54, and it hit $1.49. So we have to be, I'm a Jivo shareholder, and as a matter of fact, I bought some shares of Jivo recently when it was $1.72. I told myself I would wait till it hit $1.50, and then I talked myself into thinking, You know, what does it matter whether the stock price is $1.75 or $1.50 when it's going to be $10 in a few years? So I bought it, and then of course right after that it dropped to $1.50. Just my luck. And so yes, as a Jivo shareholder who recently bought more shares, I mean, we have to take into account the possibility of Jivo going below $1. And if it stays below $1 for 30 days, it's going to get a notice from the NASDAQ, in which case it has to do something about it. Now, in all likelihood, realistically speaking, Jivo will probably reverse stock split, which will keep it on the NASDAQ, but it's not a good move. That's kind of a walk of shame, in my opinion. Now, having said all that, and yes, the walk of shame will be really bad, I'm not too incredibly worried about the fate of Jivo in the short or long term. I mean, as long as Jivo builds this thing on time, and as long as the government, I call them the government handouts, but they're pretty much renewable energy credits, as long as that stays intact, there aren't too many more delays in that. Because as we know, Jivo is all this 2.8 billion per year. Like, a lot of that is dependent on, let's just call it, you know, they call it renewable energy credits. I call it government handout. And as long as that stays intact, I think we should be pretty good in the long term. Now, as far as what I'm spending my money on, now I already added my shares of Jivo, even though I said I wouldn't. So I'm good on that for the time being. Now my position is extra built. So right now I've been focusing on SCHD and AT&T like mad. And now that the landscape has changed, now that Google is going back up and Meta is going back up, I'm going to start focusing on Palantir as far as my growth stocks, and I'm going to keep focusing on AT&T and SCHD for my dividend stocks. Now, I will probably take a week and put a little bit of money into VOO just to get it to $5,000 invested, but that's my stock plan for the time being. But anyways, take care, have a great day, and eat your vegetables.